Hey, what's up, creeps, weirdos, freaks, and geeks, and all you dividend investors out there in the world? I'm excited for this one because, well, I don't know. The market's been going crazy, and dude, there's deals out there. Deals are getting better. And hey, what's up for those of you that are watching this live? And for those of you that are watching on replay, what's up? Thanks for joining us. And I'd love to know what you think of this. So I had an idea, and the way this works is I'm going to do the information, the topic, and then I'm going to hang out with you guys in the live chat. But please, I would love for you to share your thoughts and opinions on this idea I had. So without further ado, we're going to talk about some low yield dividend stocks and kind of why I think this could be a really interesting thing. And again, none of this is financial advice. This is just to put some companies on your radar. And if you invest in individual companies, this might be right for you. So I'd love to hear what you guys, all right, I love it. People are already saying they're weirdos. Fantastic. Yeah, so I'd like to hear what your thoughts are on this. And again, I'm just an amateur. This is a hobby. I love talking dividend stocks and sharing what I'm doing and investing. So let me know, even if you're watching on replay, what you do think of this. So first off, we're going to kick it all off with sharing my screen, and the current S&P 500 dividend yield is at move my mouse 1.82% is what we got here. So why am I showing you the current S&P 500 dividend yield at 1.82%? Well, obviously it was at 1.27% to start the year, and as the Fed has kept increasing those rates, people have been pulling out of the stock market. And what do we see when stock prices fall? The dividend yields rise. So rates have been going up, or the rates go up, and the stock yields have been going up as well, the dividend yield. But that's not always a good thing, because that means the share prices have been declining. So I found this interesting. I was looking at the current Treasury rates. Now, the risk-free rate, as they call it, is usually the, let me change this screen here. Let me get myself on the bottom corner, make it a little bit bigger. Hopefully not bigger for you guys. All right, there we go. Catching up. All right. So what do we got here? We have the Treasury rates, and currently we see that the 3-month is usually the risk-free rate, right? So that's the amount of theoretical risk-free yield that you can get. Yeah, your money's not going to appreciate. There's very little chance of the government defaulting and basically going under. And if the government goes under, man, we've got really big problems going on. Currently at 3.723%. So a lot of people that are fixed income investors or just income investors, why would you invest in, say, Procter and Gamble at like what, 2.5% ish, when that stock is volatile? It could drop even more. You could get a guaranteed 3-month return of 3.72% on that money. So I think this has been sucking a lot of investors away. And even if we look at like the 5-year, 4.27%, and even the 20-year, 4.3%. How many dividend stocks out there? Now, granted, this is fixed. It's not going to grow. There's always a plus and a minus to the Treasury rates, because, man, you have to think that money's going to get eroded by inflation too, and stocks will adjust, like we saw with PepsiCo, who just had an awesome earnings this past Wednesday. They're raising their prices. People are paying more. I think they're putting less chips in the bag, the whole shrinkflation thing. But they're adjusting. Companies are adjusting, and this is why they really help to grow our money. McDonald's just announced a 10% dividend hike. So these rates, I guess, it's just a give and a take all around the board. So I think a lot of the higher yielding companies, this is why we're seeing like REITs and utilities getting hit a little bit harder, because the treasuries are sucking a lot of investment dollars away. So my thought was, what about putting money into companies, or looking at companies that have a low yield? Maybe they're not on the radar as much as people wanting to dump them as aggressively to go after the higher treasuries, the higher T-bills. But what if also we look at companies that have really strong growth? So I've just picked out 5 companies that I'm going to go through pretty quickly here, and then I'll do a little portfolio back test. Again, I'm going to do a very quick overview and hopefully get through these fast. So first one up is Nike. Everybody's familiar with Nike. I've been having my eye on this. I don't own Nike outright. Currently let me make this a little bigger for those of you watching on mobile and also do that to my screen. Oh, here we go. You ready for the fumbling and bumbling? Function F12. I forget it. I'm just going to do this. There we go. Work with me, computer. Okay. So Nike dividend safety score of 99 and 1.39% yield. Again, I have this thought like, dude, these yields are so low. I mean, you almost want to ignore them and think, well, why would I invest in a 1.39% yield company? Well, right now, this may be good. Nike, we'll look at all these too, did increase their dividend during the last recession. 11% growth in November of 2021. So they should be announcing another increase here very quickly. 16% 20-year CAGR, just really solid growth from a really solid company. 38 years of uninterrupted dividends, 20-year dividend growth streak. And again, we see that every 4 quarters they raise the dividend. So they're due for another increase here very quickly. And their dividend yield, 38% above the 5-year average. But still, this makes me a little nervous, paying 28 times forward earnings. That still seems a little bit high, especially for a retail company. So they could fall a little bit more. And as you see, the consumer discretionary sector, they're way above the average. But again, Nike's at $87 a share, 52-week low is 83, and they could fall a little further. One thing I want to point out is their free cash flow payout ratio, which I love, has been eking up. It was at 28% in 2021. Last 12 months, 53%. But they're still buying back shares. As we see, they're at $1.6 billion, slowly buying it back. Their sales keep growing, and I don't remember their debt. They have very low debt, 4% net debt to capital, very, very low and nice interest coverage ratio for Nike, which I don't own yet. Next up on the list, everybody's going to know this one. I have two in here, though, that are going to be interesting to you that you may not be that aware of. Another 99 safety score. But again, I see that 0.82% yield and I think, it's so small. It's so small. But again, we need to look at buying the business. We're buying a fantastic business, $378 billion market cap, increased the dividend during the last recession. Dividend growth, again, really high teens across the board, 17% in October of 21. So this is another company looking like they're due for a dividend increase announcement here probably soon. 19% 10-year CAGR, really quick, 14 years dividend growth streak and uninterrupted dividends. So got a ways to go with that. And again, you can see, just like Nike, they're about ready for another increase. And that dividend yield, though, dude, 29% above the 5-year average of 0.63. Again, this is the mindset I want to get into, is that, yeah, it's small, but they're growing that by a lot. And I understand people are going to say, yeah, but it's a 20% increase on 0.82% yield. That's nothing, but it compounds. It compounds year after year after year. Forward PE only 22.9, and they had been as high as 235 a share at 182 now. So they're again close to the 52-week low. Free cash flow payout ratio 20%. I mean, they have just tons of room, and they're usually hovering between 14 and 20%. Some years they're abbreviated a little bit higher. And yeah, so I like Visa. What do you guys think of Visa? I know some of you are interested in it. Just a free cash flow per share, $7.66. I mean, they bring in a lot of money. Good sales growth, still 24%. They're, again, buying back shares. We always want to see the shares outstanding going down and the total sales going up, which 28.1 billion, all-time highs for sales that they're bringing in, and not a lot of debt, only 15%. So this next company, that's Visa. This next one is a company I have subcontracted for, and it's been a minute since I've worked for them, but I did notice one of their buildings in Bensenville, Illinois, that I drove by. It's Expeditors, air freight, ocean freight trucks. You'll see their trucks driving on the expressways. They're all over the place. And there's a really couple interesting things to like about them. Again, didn't plan this. Another 99 dividend safety score. So far, these three are sleep well at night stocks. And yeah, 1.49% yield. So low yield. But again, I think it's no problem. What are we going to talk about here? They increased their dividend during the last recession. Their dividend growth, again, 16% raised in May, this past May, 17% 20-year CAGR, just a super, super stout up and to the right. I mean, you got to love that. 28 years of uninterrupted dividends, 7-year dividend growth streak, and currently paying $1.34 per share. Ex-dividend was May. That doesn't sound right. I think they goofed up here. Or did I goof up? June of 22. Oh, okay. Gave me a heart attack for a second, Yeah, I skimmed through these, but I didn't. June and December. So they pay twice a year. So that's why I was like, uh-oh, did they stop growing the dividend? No, they just semi-annual. So that's interesting right there. Their dividend yield is 20% above the 5-year average of 1.24. Again, but what a nice double-digit 20-year CAGR. What was it? Sorry if I'm going to scroll your eyes here. 17% 20-year CAGR. Again, shipping. I love it. They're doing, believe me, this is the industry I work in. All the dock equipment, installing. I mean, I'm around this all the time. Everybody's pretty busy from what I've seen. That may slow down in the future, but only 13.6 you're paying. So you're paying $13.60 for every $1 of Expeditors forward earnings. And their price, 52-week range, again, like most of these, toward the lower end. So I think Expeditors looks like a really interesting company. I'd love to know if any of you own Expeditors. And check out their free cash flow payout ratio. Dude, 15%. It's been declining. That, to me, is just solid. Super sleep well at night. Free cash flow per share has been going up. Sales growth was at 72%, 56%. They are doing well. Buying back shares down to 169 million shares outstanding. And just look at the sales. Like, they are raking in the cash is what Expeditors is doing. Just off the charts. Return on equity, return on invested capital, super high. I mean, look at that. Just for what Simply Safe Dividend says is they want to see above 8% for their return on invested capital, which I believe means when they bring in a dollar or $100, they're keeping 54 of those. I mean, that's just fantastic. Operating margin is about where it should be. And I double checked this. No debt. They don't have any debt. I think their net debt, I think their total debt is like $501 million for Expeditors. So, I mean, they've got it together. And this is a company that probably could be looked into a little bit better, a little deeper. And then this is a company here. Let me get a sip of the old agua and we'll wrap this up soon. Go quick here. My little presentations for all y'all on an NFL football Sunday morning. It's getting a little of the macho man there. Nordson. Has anybody ever heard of Nordson before this? Put it in the comments. I'll get to it when I'm done with this. But funny story. I work for a company called Subcontract Nation Pizza. They're owned by Nestle. They make a bunch of different pizzas for like Subway and DiGiorno, right? It's not delivery. It's DiGiorno. DiGiorno. They make it for DiGiorno. And I was in one of their processing facilities and I was looking at the equipment that the pizzas were rolling off of and all. Dude, they had all kinds of Nordson. I looked up Nordson. There it is, industrial machinery. Dude, they're everywhere. They are in automotive. They're in roll package, what's the word I'm looking for? Roll products? Packaging, cardboard, wood, paper, metal, plastics, the medical device industry. I mean, they are just everywhere. I was really surprised how what am I saying here? Their tentacles are in so many different industries. Guy's got marbles in his mouth. They increased their dividend during the last recession. 27% dividend raise in August, this past August, 9% 20-year CAGR. So really fast dividend growth and Dividend King. They've been paying that dividend for 59 years and growing it for 59 years as well. We see that big raise from 51 cents to 65 cents. Nordson looks really interesting, but that yield is 35% above their 5-year average, which was just under 1%. And again, it's something I'm trying to do is I've for so long turned a blind eye toward a lot of the companies that are honestly under 2%. I'm really turned off by those. They just don't do it for me. But Nordson looks solid. They're hanging in there. They went as low as 195, currently at 210 now. So, their PE, the Ford P, is just a little bit below the 5-year average, but their financials, again, man, 26% free cash flow payout ratio. That's nothing. They want to see below 60% to feel comfortable. So they're there. Nice earnings per share. And let's see what else we look at. Shares outstanding, 58.5 million. They had increased just a little bit. Sales up 2.51 billion. Again, high return on equity, return on capital, just everything really high, really solid from a company not many people have heard about. Net debt, only 28%. So really not a lot of debt. The balance sheet looks very, very good for Nordson. And interest coverage ratio, $28 for every $1 of interest expense. They can easily cover it. And the next one, this is the old standby. 94 dividend safety score. Broke our streak, but we'll get our streak back here with good old Microsoft. Obviously, we'll speed through Microsoft here because everybody knows how just $1.7 trillion mega cap. Yeah, that dividend yield, I'm watching it. I'd love to buy more Microsoft and get in there. And man, I'm getting bright. I'm getting whitewashed here on my camera. So you guys don't care, right? And what about Microsoft? Let's see. Yeah, they maintain the dividend during the recession. So something to be interesting to watch about. 12-year growth streak, 16 years uninterrupted. But dude, 10-year CAGR of 12%. Solid, just solid growth from Microsoft. And everybody knows them. They just raised their dividend. What was that raise? Yeah, 9.7% last month. I do remember that. Currently $2.72 per share. And their dividend yield is about 3% above. So it's in line with the 5-year average. But the PE coming way down. The 52-week range, dude, they're buried at the bottom end of the 52-week range. And it's getting close that I think I might just have to start picking up shares again. I'd love to see it under 200. So that's one that I think is at the top of a lot of people's watch lists. Yeah, free cash flow payout ratio, 29%, super low. just a behemoth. $8.69 of free cash per share, and they're paying out, what was that again? $2.72 in dividends. So just easily able to cover the dividend. Sales growth. This is like the ideal company, maybe one of the strongest companies on the market, buying back shares down to 7.54 billion, almost 200 billion in total sales last 12 months. Just everything is just stellar. I don't know what the fault is. They have no debt. I mean, it's just nutty. It's nutty. And then the last thing we'll wrap up with is I back tested this portfolio. So you can do this too. Portfoliovisualizer.com. You just put in a bunch of criteria, yada, yada. You can self-explanatory. And I did these 5 companies with $1,000 and you just 20% allocated to each company in 2012. So just $1,000 into these companies with dividends reinvested, we'd currently be at $6,167. And dude, on December 31st, we're at the peak. We're at 8,700, which was a growth of 517% to right now, as and a CAGR of 18.44% growth, compound annual growth rate. So it just goes to show, yeah, they pay low dividends, but sometimes this can really, really be a great thing. And of course, 2022 is down 29% on these, but hey, until then, everything was looking good. So, hey, all right, I'm going to come back here. Stop sharing this. You don't need to see that. And I'm happy that you guys are here with me. And I'm not too bad. little bit whitewashed. It's a sunny day here. I got my blinds closed here in old Chicago. Chicago, Chicago, that wonderful town. I should know all the lyrics because I live here, but I don't. All right. Let's see what you guys had to say real quick. I want to get chatting with you. What did you buy this week? What were your hot deals? What are you happy to pick up? And do you own any of these companies? And what do you think about, am I off? Am I missing something about the Treasuries sucking income investors' dollars away from some of the higher yielding dividend stocks? I'd love to know. Jim Betts. You don't mind if I call you Jimmy, do you? Yeah, Microsoft, Apple, John Deere, Linda, LND, and Walmart. So yeah, we had Microsoft there. Hey, what's up, Steve, man? Hey, yeah, Disney pays 0. A lot of people think it could reinstate. That's going to be interesting. Anybody want to venture out and guess when Disney's going to reinstate that dividend? I don't know. I don't know why they haven't yet, but hey, it's annoying. I'm so whitewashed, man. Hold on, everybody. Hold on. Let me see if that's better. Yeah, I'll do that. Turn my light off. Anyway. All right. Let me just skim through these because I want to get caught up. I like talking to you guys in real time. Yeah. All right. Let's see. No regrets around here. Wow. Anybody want to help me out with that name? It looks like, I know it's not right, but I will say Enskojigtip. That's what I'm saying. All right. Yeah, buddy. All right, here we go. Let me miss. HPQ versus Cisco, maybe a good comparison to look at. Yeah, I could do that on Seeking Alpha. I'll take you guys with me here. Let me pull up. Let me get that set up. We'll do that. HPQ and Cisco. Let me share this good old screen for you guys. We're going to share that. Yeah, HPQ and Cisco. Let's see who's done better. What do you want? Let's do a 10-year. Let's see. Chrome tab. And we go right to it. No worries. Okay. So on Seeking Alpha, you could just put in, that was Cisco, right? Yeah, HPQ and Cisco. So we'll go to Cisco, and then you go all the way over here to the right, and you click charting and add comparison. We'll leave the S&P in there, and then we'll do H, as my friend in Ireland says, HPQ. Compare it. And then, yeah, if you guys don't know, make this a little bit bigger. A little bit. So this drop-down menu has all different kinds. I mean, their net income. Look at this. There's probably like 30 different comparisons you can do, but we'll just do total return, which is basically everything reinvested. And that's the 1 year. So 1 year, S&P's down. Yeah, HPQ only down 4%. Let's do 10 year. Holy smokes. Look at that. So over the last 10 years, HPQ's been up 415% and Cisco only 201%, the S&P 150. So yeah, these are both techie stocks, right? They've ridden that wave. But for a while it was, interesting. So there you go. So the clear hands down far and away winner over the last 10 years. And let's see, year to date, 31% HPQ has been down. So S&P 500 has been the best performer, but Cisco down 34% and HPQ down 31%. So there you go. That's an interesting thing you guys can check out for yourselves if you ever want to go to Seeking Alpha and look at that. TSN, Billy looking to add to Tyson Foods. We've talked about Tyson Foods on the channel before, and we need food, man. I eat chicken. I don't really eat red meat that much. Couple times a year. Do you only eat red meat? Are you vegetarian? Are you vegan? Do you like that HMO? No, that's health insurance. I always tell people, like, do you have any GMO calorie-free food around here? Yay. Look at this. We got a shipmate here. That was my boat. The John C. Stennis. Bless it, this sunny day here. Chris Connell. What's up, shipmate? I'm going to salute you. We've done the saluting before. I watched another YouTuber. This is just going to be for me to say, but the dude was like, this, don't do that when you salute. This is keeping the sun out of your eyes. I don't even know how to do it. But I've told you guys before, really quickly, you just take this little area right here. We're going to give you saluting tips. This area goes to the corner of your eyebrow. And you do like that, like that. And then if you're wearing a ball cap, it goes to the ball cap. So you do a ton of push-ups until you get that right. It's funny how you remember that. Chris, Nike and Visa, mix of high yield, ETF. Yeah, SCHD, we just talked about. Okay, see, the sun's going away and now high dividend growth like Visa, Costco, Deere. Deere, that's the second one. Oh, dude, I got to give a shout out. I didn't bring my guitar down. I played guitar for you last time, Jason, but man, again, buy yourself some more precious metals with that. Put it into some silver, platinum, palladium, gold, silver. Buy yourself some more bullion, some more ingots. Even buy yourself a grain of gold. What's a grain of gold going for now? I've done that before. It's a little dollop of gold you could buy. So, man, I really do appreciate that. And again, you guys don't have to do this. I mean, if you feel you must absolutely give me some money, hey, I'm not gonna, refuse it. But just you're watching, your clicks are just plenty enough. I don't know. What do you want me to do? A little dance or something? Give you fantasy football advice? Do you want me to look up something? What do you want? Let me know. Put it down there, and we'll. All right, we did that. Let me see if I can get caught up to you guys here. Companies that have, so this is answering my question. Companies that have low payout ratios and low yield could take a page from Berkshire. Yep, throw investors a bone with a special dividend every couple of years or so. I'm not aware. Has Berkshire thrown out a special dividend? By the way, Albertsons doing that special dividend. I'm venturing back into the world of shorts. So a little bit of an insider for you guys here. You're going to see that one where I put a bunch of work into, and then I may just do one. I want to keep it like news related because it's 60 seconds or less. So I will probably do. I might record myself when I'm on a job just to get a different background, and then just do a quick edit when I get home. We'll see that. I've done them before from the truck, but I don't like how they turn out because I don't know how to put like anything over the anyway. So yeah, but yeah, I'm not aware of Berkshire paying any kind of a special dividend. So let us know if you know that they do. Yields are below the S&P's yield. How hard is to beat the market? Just by VOO. Yeah. So the thing with VOO would be, and this is where it comes to your personality as an investor. You're going to have to decide if you want to be exactly average to the market in all aspects. If you want the exact average return, exact average dividend yield, which is not a bad thing. It's not a bad thing if people like my daughters, they're not going to, I don't think that they're going to want to do what I do. So yeah, I'm going to tell them VOO. My eye wasn't opening there for a second. I was getting concerned. I was like, what happened if this guy dude, that would go viral. He just passed out right there on the live stream, smashed his face on the keyboard and everything. It was hilarious. So sorry, I just had a bunch of thoughts. Yeah, as far as VOO, it's fine. If you don't want to do like some of the lunatics like I do, yeah, being exactly average for people that want to pay zero attention to the market is just fantastic. Just a great thing. Look at now I'm all getting dark. I went from being whitewashed to dark. He was answering him. S&P. So Steven said the companies he's researched have beaten the S&P 500. Yeah. So it's all just up to you what kind of investor you are. All right, now I'm going to turn this back on. It's crazy. A crazy town here. I see some people are like, I can't watch any more of this guy. I got football coming on. Oh, that's why. People are like, hey, see you, man. Football's coming on. So, yeah, I should have did it earlier. Oh, well, maybe next week I'll do it at 11. It's like church, right? That's why a lot of people don't like, they go to the early mass so they can get out to watch football. That was from an earlier comment. Journeyman, what's up, man? 11 likes. Oh, dude, thank you. Yeah, I should say that more. You see, to me, I forget to tell people like and subscribe and all that because I feel it's self explanatory. All right, here we go. Cheers, Chris. Bought some Google, Microsoft, Apple, SCHD. Oh, and sold his covered call on AMD. Very nice. AMD they've been dropping, right? They cut their guidance. The PC market's down, what, 20%, I think, in sales. Here comes the sun again. Here comes the sun. Ba-da-ba-ba-ba. Who is that? The Beatles? Yeah, just going to deal. We're just going to roll with it, baby. I'm just going to be whitewashed. So what? Google. Yeah, I was actually looking at Google, but it's hard, man. It's not hard. I was looking at Google, but I see like Texas Instruments, and I think like, I don't know. Right now, I'm still building out that position. So I get in the mindset of just wanting to keep buying more income. It's hard. That's me, though. That's me. That's me. Be still, guy. Be still sounds. I shouldn't say guy. MSFT, Microsoft, US Bank, USB, and Starbucks. Nice. Here we go. Caitlin. What's up, Caitlin? KC, everybody in the house. Do all the kids, she's younger. Do all the kids say in the house still? That probably aged me. Did you guys see you're Gen Z, right, Casey? Are you offended by the emojis? I did come across, they wanted emojis banned, like the thumbs up. There was a list of 10 of them. For some reason, they're like triggering and offensive. The thumbs up emoji, the kiss, the lips emoji, the poop emoji. There was 10 of them. It was ridiculous. If anybody wants to see, I can look that up if you guys really must know. On Lamb Research. Let's see here. Maybe I'll show you guys that one. That's a good one. Let's see. Is it? No, not LW. All right, hold on. What is Lamb? What's their ticker? Lamb. Anybody help me out here? What's Lamb's? LMB. I can't find it. LAMB. I don't know. I can't find their ticker on Simply Safe. Here, we'll come back to it if you can give me the ticker symbol for Lamb, because I think I've heard good things about them. Dude, you know what I forgot to do? I totally forgot to change the what was it? The settings for this stuff, the dating junk. Damn it. When we did that live stream, Ryan told me to I'll block it. It might be too late now. Son of a gun. I apologize. Let me write that down for next time. Block the porn sites. I totally forgot to do that. And I don't know if it might be too late to do that. Let me see. Let's see. Yeah, I don't know. Layouts. I think it's too late to do that. I think I have to do it before I start. Oh, well, no worries. Next time I'll just keep blocking them as they pop up. Anyway, yeah, Caitlin, you bought FRG and NXST. Those are not dividend. Wait, I don't remember, because Caitlin has her own thing that she's doing. Oh, Franchise Group, they do pay a dividend, 9.68%. So Casey always says that her style wouldn't fit a lot of us blue chip, dividend investors looking for that safe income. She does a ton of research. Dude, I've learned so much from her. And yeah, it's just her style for those. Yeah, you open up TSN. Nice, with 11 shares. Cool. Yeah, FRG, there's no score. They are unrated by Simply Safe Dividends. And yeah, they've had some huge growth. They grew their dividend 56% last. And they have couple years of growth. They don't tell me. It looks like 2 years of growth, but they did have a cut in 2018. So let's see. What do you guys want to hear? What do you want to talk about? What do you want to do? Let's see here. Oh, dude, another one. Michael, buddy, thank you for the, let's see. Let me find it here. You guys don't have to do this. I appreciate it. What do you want to know? Put something you want me to look up, Michael. Again, thank you. I can't do the hands emoji. Thank you. Thank you so much for that, man. I really do appreciate it. And um, block one more of these. Yeah, dude, let me know what you want. What do you want to hear an opinion on? What do you want to know? Ask away. I'll put it right up for you. Let me find back to where I was. Yeah, Casey says that LRCX is okay. Might take a 10% revenue hit from trade restrictions to China. Dude, Xi Jinping, I think he's going to win again, or he did win, right? What was it, like 2,860 something to 0? He won a slim re-election there. Still trading quite reasonably for semi-equipment manufacturer. Interesting. Yeah, I'm still one that's learning to do like the fair value stuff. I don't know. It's as I've been going through Professor Aswath Damodaran's YouTube courses on valuation, there's no one answer. It's crazy. Like there is no right answer because you have to put in, there's just so many variables that you put in and everybody comes up with their own style. But yeah, I guess I just try to keep it simple, looking at their 5-year PE. But again, price is not valuation. Like you need cash flow to be able to value something. And yeah, price just tells you what people are paying for it right now. It doesn't give you like a true value, I guess. That may be not the right way of saying it, but here. Yeah, Billy, he's not interested. That's why I kind of wanted to do this video because, man, I feel the same way. Like if I don't see that 2% yield or 2.5%, as soon as I see that 1 or a 0, I'm like, yeah, I'm out. I just stop looking. But, yeah, my sponsor's back. I know, but I completely dropped the ball on that and totally forgot to do the old Blockaroonie. Yeah, I know, guys. That's my fault. I'll get it next time. Let's see. Hey, Cody. Cody's got a YouTube channel, dude. We got to talk, man. Let's set something up. Whenever you want to do something, we'll do a video together on something. I don't care what it is. Let's see. The Bears. Yeah, it's why I like playing fantasy football because I get to root for players on other teams without rooting for the team, just those individual players, if that makes sense. Kind of like stocks. Instead of betting on like a whole sector, I'm kind of rooting for individual companies. Maybe that's a bad analogy. I don't know. I'm not the greatest at analogies. Yeah, semis are getting crushed. Most say buy cyclical when they're low. It's going to recover. I think it's just a matter of time, dude. All you need to ask yourself with like the chip stocks is, yeah, the PC market is slowing, but isn't that just a shift into something else? Because everything, I mean, just what I'm looking at here, I'm sure this microphone has a chip in it, my camera, my laptop, my interface, my phone. I don't know. The remote for my lights back here, which are completely whitewashed out. Maybe if we go with blue. But yeah, the lights that are completely whitewashed out. I'll bet you this has a chip in it. I mean, it's just everywhere there's chips. Chips ahoy, Bappa. What's up? Wife? No, it's the sun. It's fine. My wife is here, everybody. She heard me complain and jabber jawing about the light. She might say hello. My kids never say hello. But, Elevance. Michael, yeah, we'll look up Elevance for you. Let's go. Don't worry about it, Jen. I've only got like 20 more minutes left. It's sun. Your sun's going away anyway. All right, let's look. See, now it looks good. What was I doing? Elevance for Mr. Michael Preston. Come on, everybody. I got to bring you with first. I'm already looking onto Simply Safe. I need traveling music. Da, 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 da. And I was looking at FRG. Look at FRG's dividend growth, 56%. So, yeah. And there's my old Mr. Louis. What was I looking up? I don't remember their ticker. ELEV. Oh, Elevant. All right, I got to slide this over. Elevant Health, ELV. There we go. Oh, my cat. Here. So we got my guess there. Yeah. You didn't see nothing. They saw his tail. Anyway, I'm going back to elephants for Michael. Force him to do things. All right, let's go back, everyone. Thanks for putting up with this, by the way. Just having some fun here on a Sunday morning. Elephants. All right, we were looking at elephants. Yeah, dividend safety score of 99. 99. 1.09% yield. So here we go. This kind of ties in nicely with what we were doing. 13% growth in January. So they're going to be due for another one here soon. $470 a share. So I'm guessing they have a couple million shares outstanding, maybe. Let me do this. Did they no dividend paid during the recession? Interesting. 16% 10-year CAGR. Cool. Yeah, very fast dividend growth. And 10-year growth streak. So they're officially a dividend achiever. Dividend ex-dividend date just passed. $5.12 per share. I think somebody's wife worked for Elevance Healthcare, if I'm right? The dividend yield 8% below the 5-year average. So doesn't look by that metric to be on sale, but that's just one metric. Doesn't mean that it's right or wrong. The PE is above. So we like to see the dividend yield, for those of you that are new, above the 5-year average, and the forward PE below is like a really good, just very 1,000-foot view of something being potentially undervalued. And look at that, man. Their price has held up well. They're right smack dab in the middle of the 52-week range. And let me just look at a few financial numbers. Free cash flow payout ratio, too. It's super low, 15. They're going to be raising their dividend for quite some time. Free cash flow per share, $33.20. Stout. That's fantastic. Jeez. Sales growth, very nice. Yeah, 245 million shares. Total sale, 149 billion. Look at just solid. Everything looks solid. Really good company. No debt, according to this, or low debt. Sometimes when they put net debt, obviously that's meaning they have more cash on hand than long-term debt. Very interesting. And let me just get a quick, because I don't know exactly what they do. Health benefit company. Okay, they support consumers, families, and communities across the entire care journey. Interesting. 118 million people they serve through medical, digital pharmacy, blah, blah, blah. And they are headquartered in good old Indy, founded in 1944. Interesting. Well, we all learned something. We're a little bit better investors. So honestly, I would wait for them to come down a little bit. Dude, save your money for you or your family. Go buy yourself a beer. Give me the money. I'll take it. But Jim, portfolio trimming down his portfolio, thinking get rid of Intel. That, you know what? That's so funny. Yeah, thoughts. I do have thoughts on that, because this week I just sold off. I sold off. What's the difference between selling off and sholding off? I guess if you have a speech impediment or you talk like Sean Connery. I'm not going to do it the whole time. I actually tax loss harvested 3M this week and part of Intel. I'm keeping the 100 shares so I can hopefully one day sell a covered call on those again. And I wanted Intel to be part of the wheel, and I got a cash secure put assigned at 47. So obviously that hasn't gone well, but I tax loss harvested. I had 121 or 3. I don't remember. So we'll say 23. I sold the 23 shares to get down to 100. And I put that money into Texas Instruments, just bought Texas Instruments. And with 3M, I sold 3M because I'm thinking that their ex-dividend is going to be somewhere around November 17th to the 19th. And when you tax loss harvest, for those of you that don't know, all you're doing is you're realizing a loss. Instead of it being a paper loss, just on paper, you're actually selling and realizing that loss. And you can apply that up to $3,000 to lower your taxable income. So if you have dividend income up to $3,000, you can lower that, what you would pay taxes on. But my thought is, and I'd like to grab a few more 3M, and I'll probably dollar cost average in. I think a lot of people are going to tax loss harvest companies like 3M. I think last time somebody mentioned they think Facebook could be one, Intel, AT&T, Verizon. I think a lot of these companies that are down big, they're going to be a lot of tax loss harvesting going on. So Hopefully I can buy back in before the next dividend a few shares. And then if it really starts picking up and dropping hard by the end of the year, could be a great buying opportunity. And I already got my tax loss harvesting done early. So, we'll see what goes on. That's what I did anyway. So yeah, I think those are going to be popular tax loss harvesting stocks. Yeah. Again, I agree. Thank you, Casey, for your insights. Solidly Gen Z, not offended by anything because the world moves too fast for me and is largely a confusing swirl of light and sound. I love it. Invest and take sun naps. Life is better that way. Dude, that's the comment of the, I don't know what this did. I gave it a star and I don't know what that does, but I don't know. You got a star on your comment. Does anyone know what the star does? I don't know what it does. I don't take naps. I should take naps. I'm getting older, everybody. My grandpa used to take naps and he lived to 92 and he used to take naps every day. Every day. Come home from work for lunch. He would draw the blinds, take like a 15-minute nap, eat, and then go back to the office. He lived a block or two away. So, hey, apparently it does something. LCRX. That was Caitlin's. Oh, Lamb. LCRX. Jesus. There we go. I started the comment. Yeah, okay. Let's go back. Let's go back to the Simply Save Dividends machine. And I'll sing and buy time for all you people. Guy's crazy. What's the matter with him? We're going to do ASMR dividend investing stuff. LCRX. God bless it. Did I do it? LRCX? We're going to get it. Oh, I just had it. Hey, we can type. There it is. We're there. Made it. 2.19% yield. Semiconductor equipment. 15% growth. Yeah, let's see. What do they do in a nutshell? So some of these can get long. Not going to read all that. Oh my God. I'm moving it too fast for you guys. Sorry if you're spinning. Talking about the world being a spinning ball of sight and sound. They design, manufacture, market, refurbish, and service semiconductor processing equipment used in the fabrication of integrated circuits. Terrible. Awful. I give that Sean Connery impression a solid D. Yeah, I was going to say D minus. We'll go D. Okay, so they were started in 1980 and they're in Fremont, California. No paid dividend. No dividend paid during the last recession or no paid dividend either way. Holy cow, look at that. 29% 5-year CAGR. Let's see if they can keep it up by looking at a few metrics here. Their ex-dividend pass, $6.90 a share. Look at that. Dividend yield, 58% above the 5-year average. Forward PE, only 8.7. So like most of the semis, they've just been getting crushed. They were as high as $729 a share, down to $314.95. That's interesting. What do they have? About 80 million shares outstanding or something? Free cash flow payout ratio, 33%. Love to see that. Yeah, free cash flow, $18.30 a share. Sales growth looks okay. 141 million shares outstanding. Yeah, buying back shares. Total sales up and to the right. Very stout return on invested capital, return on equity, just 75%. Unreal. I don't know. Do they have a lot of debt? We'll see, because that could boost the return on equity. Operating margins, good. Net debt, 23%. So according to this, they didn't have much debt, but they just started taking some on, and they can easily cover the interest on the debt. So interesting, they get a 66 dividend safety score. Lamb Research. Okay, now we're all a little bit better. Yeah. Yeah, all right. Let me see here. I'm going to get caught up to you guys. Apparently a tricky ticker for most to remember. Well, it was for me. Even when you told it to me, I couldn't remember it. Hey, Florin. Well, this is the beautiful thing. If you missed the start, you can go right back before I jabber jaw on. It's funny. Some months back, I watched another YouTuber in the finance space on his live stream, and it was called like Sunday morning live stream. And then the title on the thumbnail was Sunday morning live stream. I clicked on it, and the dude was he spent like 30 seconds just looking, and he was doing something on his computer. And he's like, okay, we got some people in here. We'll give it a few more minutes. And then he's just typing on his computer. Dude, I was like, dude, I got stuff to do. Like, come on. So, and without, it going as, I don't know what I want to say. My brain gets jumbled up here. He didn't have a lot of views because that's why I do it. The replay value, maybe if you're hanging out, it was good, but the replay value was just awful. And I think he started getting into his comment, and he didn't really have direction. He was like, hey, so what do you guys want to talk about? I was just like, this is crazy. Like, there's no way I would watch this. But my hope is when I do these, that even 3 weeks from now, somebody may stumble upon this and get some value. So now you guys know, like, when I'm starting this, I'm trying to give value to you guys watching it live and to the person watching it in the future. And they may not really care about what we're doing right here. So a little bit of the method to the madness of why I do what I do, So again, Michael, thank you for that $5. And yeah, Florin, you can watch the replay. I love it. Yeah, any good Elevance? Yes, Elevance I think is good. I think it looks solid. Although my only qualm is with the healthcare space. I think it's a little bit murky, and we've talked about this because of the Inflation Reduction Act. And I don't know. It's kind of like the camel under the camel's nose under the tent, right? So they're getting their foot in the door now with Medicare being able to negotiate drug prices, and companies are going to be capped, and it's going to be regarding. I think they can't raise prices on their drugs faster than inflation, so they may just put higher prices right out the gate. They're going to figure out their way around it, but I just think there's a lot of murkiness, and I don't exactly know how it's going to affect the sector overall, and then more specifically certain companies within. I know there's been a few articles where people are trying to give their guesses, but I think there's a lot of unanswered questions and murkiness with the medical space, healthcare space, which medical is in. Yeah, Camaray buying ASML. Nice. Yeah, I am. Sorry, I'm reading it along with you guys. Let me get caught up to you guys. Position with Starbucks, Altria, and Elevance. Hey, that's nice. You get people get their caffeine jitters and their tobacco, and then they're going to need healthcare, and they're going to have to get, bring maybe a company like Elevance into the fold. So you're getting the whole cycle there. We're going to get people wired up on tobacco, and then they're going to have to go to the doctor. So it's like a turnstile, man, hitting money at every point of it, I guess. That sounds bad to say. Just making a joke. Hey, look at this. Taking an online course in finance, trying to learn. Yeah, me too, man. Me too. Again, I don't know if you heard me say Aswath to Motorin. Fantastic stuff. Casey's not interested in owning anything semi-related for another 3 to 6 months. But if she had to pick one, it'd probably be CalAC. Never heard of that. Interesting. I might... God damn. I'm so sorry, guys. This will be done next time. I've learned my lesson. Blocking this Tinder now. And yeah, give me a rent. Yeah. Well, we're not. I know. That's my wife. My wife's son. Dude, again, Michael, buddy, invest in yourself. I really do appreciate it. My family appreciates it. We give our wholehearted, warm thanks to you. And someday I'll drag the kids on in front here to say hello. And yeah, my wife. Yeah, that's old Borat. TX on a 99. I have a buy order for Monday morning. I'm not going to put it up, but I don't remember what they get. It's up there, I think. They're a 90, so very safe. That's close. Yeah, Intel, the full 3 tiers below Microsoft in their rank. Yeah, dude, I agree. Intel is, and I said it on the podcast last, that Intel has really become a story stock, and it could be a value trap. So, and it's being treated as such, but the cheaper it gets, the less risky I think it is. So, or there's a bigger risk reward, right? Yeah, still a fan of 3M. Yeah, I still want to hold them, but I think it's going to be really rocky for years to come. And I don't think the lawsuit is going to crush them. I think they're going to survive it. And as I pointed out in another video, with some of these companies that have huge payouts like Johnson and Johnson, what was the other ones? Some of the opioid settlements, they have some of those payouts structured over like 15 to 20 years. So it's not like you owe $20 billion all at once. No, it's tiered out because they know these are businesses that actually do good in the world, and they don't want to just shut and crush a business that employs plenty of people. So yeah, guys, AT&T, it's just going to be worse for AT&T. Shamir, I was wondering where Shamir was. I was going to say, where's Shamir? All right, we got 5 minutes left, and I'm going to get out of here because I don't want to keep you guys. Go enjoy your day or support somebody else on YouTube. I think I can hand off to other live streams. I don't know. Healthcare sector worries. Worth knowing that Senator Lee sponsored the Protecting Drug Innovation Act, which would effectively roll back those Medicare drug price negotiations. Yeah, again, yeah. So if we get a red midterm, again, it's just that uncertainty, and we don't know what's going to happen, you know? So it's just uncertainty that people should be aware about. Maybe nothing happens. Maybe some companies get hammered and others, they're untouched and they benefit. I just don't know. It's just some murkiness. Air Products was that CE. That's not Celgene and PPG. Oh, CE. CE. We've talked about CE before. Celanese. Yeah, I think, let's see. Celanese is a 77. We'll just do that because we're at the end. PPG is a 93. And what was the other one? APD. I think APD's up there, but they have a really high free cash flow payout ratio, which I haven't dug into. They have a 488% free cash flow payout ratio, and they've been, well, here, I'll show this to you. Casey, if you're still watching, let me share this on APD. Maybe you know, because I haven't dug into this with, we'll stay on here for a second longer, APD. So APD, Air Products and Chemicals, they get a dividend safety score of 95, but if we look at their growth, 39 years, okay, that looks good. Everything looks good. But when I get to the financials, their free cash flow payout ratio, 488%. And it's typically 155, 96, 103, 152, 147. So, I mean, I've never really dug into APD other than just skimming through this. But their free cash flow per share is down to $1.28. And yeah, they're paying out $6.48. And so look at, they're paying out $6.48 in dividends, and free cash flow per share is currently $1.28. Not good. Where's their, let's see, they've actually been diluting shareholders a little bit. Not crazy, but little bits of dilution. So they're why? You know, sales are okay. Let's see, free cash flow margin, 1%. You know, it's just net debt is 24%. So it's ticked up a little bit, and they have good interest coverage ratio. So I'm not quite sure why they have such a high rating and how they can keep paying such a high payout ratio. So that's something I'm worried about. And yeah, I'd be worried about that. Dupont, I'm not familiar with Dupont's issues. Let's see. Dividend Dreamer sold 3M due to morals and poisoning people, so I sold with her. Yeah, I know. That's where the personal part of personal finance is going to come into play, right? I mean, we have to do what we think is best. And that'll be for the courts to see if they intentionally did it. And I will say, if any company intentionally does everything, then anything, they should be punished to the full extent of the law. And if it comes out that 3M knew what they were doing and dumping these chemicals in the water, or, you know, they knew that people were losing hearing and they didn't care and it was negligence on their part, then by all means, they absolutely should be punished. And I hope that they do get punished. So, but that's what the courts are for. We can speculate. That's what the whole litigation is supposed to be about. Watsco, what's up, Antonio? Joining us here as we're about to wrap up. Let me see. I think it's WSCO. It's not WSEO. Watsco, oh, good old Watts, WSO. Watsco gets a 55. Dividend safety score of 55, though. So borderline safe. And they've been growing that dividend for 8 years. Dividend yields 13% above 5-year average. I know you guys can't see this, but free cash flow payout ratio, 93%, and it had been 83%. So that's going in the wrong direction. And their debt is only 15%. So I don't know. Doesn't really do it for me. It's kind of my, here we go. Let's see. APD's free cash flow is getting devoured by crazy CapEx right now as the company builds out its clean hydrogen projects, which management is betting most of its future on. If it pays off, big win. Interesting. Their CapEx, their capital expenditure is getting close to $750 million for the year on just $900 million operating cash flow. Yeah, so basically that tells me it's a risky bet. And you know, it's funny. The thing I do, and I'll kind of end with this, is that I just go through. I love Simply Safe for that. Now it's not a end all be all end all. It's not a be all end all, but I kind of just like to scroll through that. And if something looks interesting, then I'll go into the company's 10K. I'll read their financial reports. Obviously, that takes a lot more time, but I guess in a nutshell, that Simply Safe Dividends, I think, is a really good sniff test, right? Does it pass that initial, I want to look deeper? But then I'm going to miss opportunities to speak to KC and what she does. I mean, she digs into companies and they may not look good on that sniff test. So all comes down to your style, all to your personal all to your personal choice, what suits you best. So what suits her may not suit me, and what I do may not suit Antonio. Or Coyote Glass has given us the old I don't know, is that one of the offensive emojis? You know what, I will end with that. We're going to look up the emojis that want to be canceled. So by Gen Z, and I'll put it on here, canceled. Oh, I think it was a Reggie article. Let's see. It was 10 of them. Does anybody know? Here we go. All right, let me share this screen. You guys can watch with me here, and then we'll bug on out. So, Gen Z, I blame your generation, Casey. This is what I want to share. All right, here we go. Let's see if they got a list of them. So Gen Z said these emojis are uncool and passive aggressive. And I think I read they said that old people use them. Where are they? They should have a list down here of there we go. So Gen Z wants to ban these 10 emojis: the thumbs up, the red heart, which is a black heart here, the okay hand, right? I think that was, I learned a few years ago that means white power, they say. I don't know if that's true. Check mark. I don't know why a check mark is offensive. The poo emoji, the loudly crying face, the see no evil monkey, the clapping hands, the kiss mark, and the grimacing face. So Gen Z wants to cancel these 10 emotions, and I don't know. I don't get it. They don't bother me, but yeah. Citizen. I know. I learned that a few years ago, and I used to do that until I learned, and then I can't use it anymore, because even if it's not what I think it is, if there's people out there in the world that's what they think it means, then to them, I don't know, that's what it means. So, hey, that's, all right, guys. Well, I'll use all the emojis right at once to get out of here. So, yeah, I really do appreciate it. There's a link down below for my newsletter. I'm going to work on that tonight. I fire it out I send it off. All it is a really quick recap. There's just a thought, and then the dividends I received, what I sold, what I bought, and then a few, maybe like 8 to 10 notable stocks that I think are going, or stocks that I think are notable that are going ex-dividend next week. So you can sign up for that if you want. It's free. I was going to say evil because he said evil. It's free and evil. It's a free and evil dividend newsletter that you can get. So All right, guys, go enjoy your Sunday. Get out of here. Start, yeah, there we go. Steve, uh, thanks, Steve. Do that one. All right, guys, I'm getting out of here. It's a Sunday. I got stuff to do. Go do stuff. Get out in the world. Enjoy life. Live your life, and we'll talk about next. We'll see what happened during the week next Sunday, right? Next Sunday. So I love you guys, and thanks for hanging out, and take care.